Lagos-listed Guarantee Trust Co. is set to be the first Nigerian financial services company to secure a secondary listing in London. By 8 a.m. on July 9, Guarantee Trust Holding Company, the parent of Nigeria's biggest bank by market value, lists after selling $105 million in shares to investors. Lenders have till March next year to complete Nigeria's largest recapitalization in decades. GTCO announced an accelerated book build (ABB), a capital raise being managed by Citibank, where shares are offered to institutional investors at a discount to the current market price and used when the issuer wants to minimize market impact, raise funds quickly, or take advantage of strong investor appetite. At a time when other large Nigerian banks are grappling with forbearance-backed loan books, GTCO stands out as having zero forbearance loans, which testifies to the exceptional quality of its risk assets. The deal is yet another example of global investor appetite in the much untapped Nigeria equity market. Hello, welcome again to Global Business Insights, where we discuss drivers moving markets and offer perspectives on business and the economy. Today we look closer at implications of the latest US non-farm payrolls data and what passing Trump's flagship tax bill into law means for the rest of the world. But first, some other business news. President Trump said Washington will begin to send letters to countries today specifying what tariff rates they will face on imports to the United States. Acknowledging the complexity of negotiating with over 170 nations, Trump said letters would be sent to 10 countries at a time, laying out tariff rates. OpenAI signed a $30 billion a year deal to rent around 4.5 gigawatts of computing power from Oracle, a business software giant. The agreement is part of the artificial intelligence startup's Stargate initiative to invest around $500 billion in building AI infrastructure. Oracle is building data centers across America to meet OpenAI's demand for power. Power has become a major new competitive and important lever in the new technology dynamic. And in the UK, government bonds rallied after Sir Keir Starmer said Reeves would be Chancellor for a very long time to come and insisted the government would stick to her fiscal rules. This came after Starmer did not back the tearful Reeves in the House of Commons on Wednesday, triggering a sharp sell-off in gilts and the pound. And more good news that could cheer up Chancellor Reeves was the UK Services Purchasing Managers Index print. The S&P Global UK Services PMI final index rose to 52.8 in June, up from 50.9 in May, and the highest since August 2024. The latest and final reading was above the earlier June flash estimate of 51.3, and S&P says is indicative of a solid rate of business activity expansion. Still on PMIs out today, China's Services Purchasing Managers Index fell to 50.6 in June from 51.1 in May, missing the market forecast of 51 in the reported period. Still on trade, footwear stocks led by Nike rose in morning trade. That was on Wednesday after the US administration announced a trade deal with Vietnam. After an initial pop to rise as much as 4%, Nike's stock was up about 1.7% in mid-morning trade on Wednesday. The deal with Vietnam lowers tariffs on Hanoi's exports from a threatened 46% to 20%, but still retains a 40% levy on transshipping of goods widely believed to be aimed at Chinese re-exports to the US. Earlier in May, the US and UK agreed a deal that included strict security requirements for steel and pharmaceuticals that were widely seen as intended to squeeze China out of British supply chains. Also, we've seen the US relaxing the bans on the export of chips to China. Beijing has vowed to retaliate for what it sees as many measures targeting its interests. And to our two main stories, Donald Trump yesterday secured passage of his flagship tax and spending legislation after the House of Representatives approved the bill, handing the US president a political triumph 6 months into his second term. The vote by the House came after Democratic Minority Leader Hakeem Jeffries spoke non-stop for a record 8 hours and 44 minutes against what he called the ugly legislation, describing the vote as a crime scene in a symbolic act of defiance. Second story is on the US non-farm payrolls jobs data. It's a heads I'm right, tails you are wrong scenario. A weak report would have foiled the invectives heaped on the Federal Reserve by the White House to cut rates, while a strong report allows the administration to tout a strong economy amid expectations that many will hold back hiring. And just ahead of the bill vote, the Bureau of Labor Statistics surprised analysts when it announced the U.S. economy added 147,000 jobs in June, defying expectations that trade uncertainty would cause hiring to cool and leading investors to scale back their bets on interest rate cuts. U.S. June unemployment rate came in slightly lower at 4.1%, less than 4.3% expected. The data was the type of Goldilocks release, not too hot and not too cold, supporting the case for the Federal Reserve staying on hold for longer this year, though June CPI data may influence the July 29th and 30th FOMC decision. It gets better. The average hourly earnings slowed more than expected with a 0.2% gain against the 0.3% forecast. Good news for inflation. Labour participation rate ticked down slightly. The overall labour force shrank in June and the number of job seekers came down. So the bigger reason for the drop in the unemployment rate could be people simply leaving the labour market. Notably, job growth indicates that the biggest opportunities are within a select few industries, with the vast majority of gains in healthcare, that's 58,600 jobs, leisure and hospitality, 20,000 jobs, state and local government, 80,000 jobs. Despite the still high mortgage rates and data that showed a disappointing spring housing market, construction jobs were up by 15,000 in June, also the biggest increase since December. For overall government jobs, it was the biggest since March of last year. Again, this is due to state and local jobs, not federal jobs. The size of the immigrant workforce also continued to shrink in June as we saw 3 straight months of declines, which could be the result of increased enforcement actions, which will be boosted by the funding that will now be coming from the new law. It is still remarkable that despite all the uncertainty over trade and immigration policies, the latest figure from the Bureau of Labor Statistics surpassed both the upwardly revised 144,000 posts added in May and the 110,000 predicted by analysts. And more good news, on top of jobs added, was the weekly jobless claims figure, also coming in better than forecast with 233,000 claims against the 241,000 median estimate. The markets immediately reacted as stock futures popped, with the S&P 500 closing at another record after the report fueled optimism on resilience of the US economy amid chaotic trade policy and all the geopolitics. Treasury yields climbed, the dollar inched up, the Dow and Nasdaq also closed at record highs. Yesterday's reports come a day after the ADP released data showing private payrolls decreased by 33,000 last month, raising fears that perhaps the economy was starting to be rattled by the rapid policy changes. Looking at the new law and the jobs added, there are implications for global markets. I am not going to attempt to reconcile the widely different predicted implication scenarios depending on the lens you're looking through, from the over 5% GDP growth golden age to a deep, dark recession. But if we do get national debt ballooning the deficit by $3.8 trillion over the next decade, as the Congressional Budget Office predicts, this potentially drives up global interest rates and may also cause capital outflows from emerging markets. The impact on the US deficit could lead to higher interest rates and a stronger US dollar, affecting currency markets and international trade. As the dollar strengthens and Fed holds for longer before normalizing rates, dollar borrowers will continue to feel the weight of higher costs. Also, analysts are noting a substantial flow of immigrant labor back to home countries, tightening up the job market, and which could imply some export of unemployment. Investment flows to Africa and developing economies will be subjected to tougher risk-return considerations as capital flow tightens, implying a greater need to de-risk and improve business competitiveness. But let's not forget the great news with the GT Bank London secondary listing, evidence of appetite to go after winners in the emerging markets and developing economies. Like I also mentioned in a previous episode, African Finance Corporation CEO Samaila Zubairu said Africa holds $4 trillion in untapped domestic capital, with an additional $1.1 trillion in non-bank financial assets that could transform infrastructure and economic growth if properly mobilized. The need to tap domestic capital on top of foreign capital is now even more urgent in the scenario ahead. President William Ruto at the London Stock Exchange on Wednesday said Kenya is planning to privatize some state assets via initial public offerings to bring in more private sector investment. He added that the government plans to start with listing the Kenya Pipeline Company via an IPO on the Nairobi Securities Exchange this year. Kenya's economy grew 4.9% year-on-year in the first quarter of 2025, a similar pace to the same period a year ago. Nvidia hit a market value of $3.92 trillion, briefly putting it on track to become the most valuable company in history as Wall Street doubled down on optimism about AI, and Trump rescinded some restrictions on the export of chip-designed software to China just weeks after putting the limitations in place. Asia-Pacific markets traded mixed after Wall Street gained on a better-than-expected jobs report, easing investors' concerns of a slowdown in the U.S. economy. U.S. markets are closed for Independence Day's holidays. The second half of the year is starting with optimism in the US, and that is an understatement, as the trumpets herald America 250, the beginning of the 250th year of US independence from the British. EVI wishes them the best as the country celebrates. Well, that's it on this special episode of Global Business Insights. This is Bode Oshosami. Thank you very much for watching. Bye-bye, and do have a great